Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for the week beginning Monday, the 11th of January, 2016, not 15 anymore, right? And ending on Friday, the 15th. And guess what? Feels quick because we only had one real trading week of January, but this is already options expiration week because New Year's Day, January 1st, was a Friday. Options expiration is the third Friday of every month, so that's the 15th. So we'll talk about that again in a moment. Here's the ES front month futures contract daily chart. It's the S&P in futures format, which is the true technical way to map the market. Oh boy, we've seen this picture before, literally 5 months ago. Same plunge, same almost exact starting point. We're heading lower and approaching the lows of August. We closed at the week, and it was a very negative start of the year. I'm still going to post a end of 2015 recap report that'll talk a little bit about some of the broader aspects of the market right now. But needless to say, this does not look pretty. And so we'll see what it leads to. It has created some volatility and some nice late day moves for us in a couple of days this week. Interesting to see a lot of the setups occur. A lot of times it's the first 2 hours of the day that are exciting. And this week we saw some afternoons, and that was good because when you have these sell-offs, they tend to sell it off worse in the afternoon, and that happened on at least 2 of the days this week. Where does it put us? These fib retracement numbers that I'm showing here no longer really matter on this chart because that was all from the August move. So if we clean this up, the lowest close in August was just under 1875, and we're about 40 points above that. And we'll cover that in a day, obviously. So just be aware of that. And then if we crack these lows, there's a couple possibilities, by the way. If you do just sweep the lows of September, get a nice reversal day off of that, it becomes a really strong double bottom in the market. It might lead to a huge rally. But of course, cracking those lows and not holding it, not reversing off of that is a recipe for disaster. Here's a look at crude oil closing the week at 33.15. Lowest close yet, down 11 cents. Nothing pretty about this chart if you're a bull for crude. This thing looks like it's going into the 20s to me. Gold after a couple bounce days down 330, not a big deal there. So the S&P cash index on Friday lost $21 points. And by the way, that's after kind of gapping up. We'll look at the intraday action on that. So, that's a real sell-off. Everybody thought we were getting a relief bounce, and it's not happening. Keep in mind, folks, we said this over and over again starting in November. A lot of the big stocks like Apple and Amazon, Google and Amazon, Apple's not really one of them. Because Apple did not do well last year. Google, Amazon, the stocks that were up a lot most of last year, nobody wanted to sell those near the end of the year and lock in the big tax game. We talked about that over and over again. And once we get to January 1st, now they can sell. And so, yes, there's some situations in China. Yes, people are a little nerve-wracked, I think, by where crude oil is going. Yes, North Korea lit off, a firecracker or something the other day. But at the end of the day, a lot of these stocks are available to be sold that weren't available to be sold late in the year, and they are very heavy in the indices. So we'll look at some of that and put some measurements to it. Here's the NASDAQ 100 down almost 35 points for the session. SOX lost almost 10. That is not a pretty level for the SOX at all after being down a couple of days. Biotech's also melting. Remember, Asgo, banks, and biotech so good in the market. This one will crack lows probably first and give us an indication of what's really coming. VIX closed the week at 27.01, up 202 for the session. Remember, it's that 40 level. We only got about 41 day back in August. That was the low. Doesn't have to exactly work like that, but it did in August. So we'll see what happens. Another high close on the trend at 1.79. That takes the 10-day moving average back up to 1.63. NASDAQ volume on Friday, 2 billion shares. It was almost 2.4 on Thursday, almost 2 on Monday and Wednesday. Tuesday was the boring day at 1.7. Advanced decline ratio is actually a little bit better. This is interesting. The breadth was better than Wednesday and Thursday, but still negative. Negative 1186 on the NASDAQ, negative 1103 on the New York. Now here's a look at that Google I was talking about. Remember, nobody wanted to sell. Nobody wanted to sell. 2 days from the end of the year, it makes an all-new high for the year. It gets a 13 seeker sell signal, which is a technical signal. And then now we're approaching the red static trendline target of that, but I don't think that's going to hold it. And you got a gap fill below. It's not because Google's suddenly a bad stock. It's because people are willing to sell it and lock in those gains. They got a year to pay the taxes on them. Apple, on the other hand, was not up for the year last year and really is not up for the year this year so far either. New low close for a long time in Apple down at 96.96. This is lower than any close it got back in August, by the way. And actually, let's go back to that chart real quick. When the plunge happened in August, Apple was holding up okay. It's stuck in the 124 to about 112 area. And then it was the big down day that was the bottom in the market where Apple suddenly gapped down to like $90, $94, went a little lower, and then reversed hard, and that was the bottom in the market. This is different. We've been trading down through those prices. Everybody was saying, oh, yeah, it held 100. We've had 2 days in a row of solid trading on volume under 100 on Apple, so it's not a positive for the stock. Amazon, another one that was at the highs at the close of the year, now selling off, down 89 cents only here, but that's what's happening. Netflix, another one that was up pretty good for the year, down $3.17. It actually had a good run here the last 2 days, but that part of that's because they had a story to tell at CES in Las Vegas this week. So let's take a look at the intraday action in the futures on for the week. Gap down on Monday, kind of went lower, mostly flat, bounced a little bit late in the day. Flat open on Tuesday, flat day all day. Wednesday, gap down, tried to move up a little bit, closed right where we opened. Matter of fact, those 3 days, all three of them, what's interesting is even though we were down for the week so far at that point, all three of those days basically closed right about where we opened, which is really interesting. Wasn't a very exciting intraday action. Thursday, on the other hand, gap down, rallied up, couldn't get even into Wednesday's range, stopped out, topped out right there, rolled over, actually went lower for the close on Thursday, and then Friday, the gap up. Everybody thought, oh, finally, gap up, relief. We're getting some break. The unemployment numbers were good. Keep in mind, the unemployment numbers are good. The employment job creation was not bad. Stuff like that is, generally speaking, good numbers. Problem is the market is going to do now reflection of what it's looking at 6 to 9 months down the road. So numbers being good today, that's the buy the rumor, sell the news type of stuff. We've had good numbers for a while here in the market in terms of the economy. Doesn't mean that's what it's going to be in 6 to 9 months, especially with everything. You got to factor in all the global factors now, right? What's going on in China, what's going on everywhere else. And if that's going to start to lead to some sort of tightening up, we've got an interest rate hike now with talk of more if the dollar breaks out, all sorts of stuff that could still happen. So if we closed on the lows Friday, after being up for the beginning of the session, I think that's not a place that's going to make people happy come Monday. Next week's options expiration, and that's the day that people have the least protection. So next week, and if we do sell off all this next week and it kind of starts to turn a panic, big market crashes tend to happen right around options expiration. Just saying. Monday, no economic data. Tuesday, JOLTS job openings at 10 a.m. That's 30 minutes in. Wednesday, MBA mortgage index. Crude oil inventory is an hour in. Fed beige book at 2 p.m. Treasury budget at 2 p.m. Thursday, initial and continuing jobless claims, import-export prices, and natty gas. That's the weekly number. And then Friday, we've got retail sales, PPI, Empire Manufacturing, industrial production capacity utilization, the Michigan sentiment number, and business inventories. Data dump on Friday. What else do we have this week with options expiration? Wednesday, maybe Thursday, we should get the options unraveling move. This is a single expiration, not a triple expiration, so it doesn't have to be heavy. But if there's movement in the market, leading, if we continue to head down like we did this last week, you better believe there's going to be some options unraveling going on. And then Friday, of course, is expiration, which typically would mean Friday's dead, but look out with everything that's going on here in the world. So I'm looking forward to this week. Again, I had a good week this last week. Futures were great for us. Stocks were pretty good for us, at least 2 or 3 of the days. That's all you really want. So we'll be looking forward to this week ahead. No Fed meeting yet for the year. And that's it. Charts as usual, brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. And if you do find these videos useful, please like them on YouTube. It does help us out. Have a great second week of 2016 in the markets.